good? Fantastic. So welcome. Monday, 29th of April, Mentorship Monday. If you're new, you've been promoted from white belt to blue belt. Congratulations. We're going to go over today any questions you have specific to blue belt program. Questions about live trading, optimizing systems, forward testing, anything at all. Probability, risk reward, expected value, etc., etc., etc. Eric, how am I? I'm excellent, thank you for asking. Peter, how's your foot? It's fine. There's not really any pain. It's just super inconvenient. And I'm a lot hungrier and I want to rest more. So I can tell my body's like trying to heal. Because I'm moving less, right? Obviously I'm not able to walk, so I've got crutches. So I'm not even moving much during the day, yet I'm hungry constantly. And I want to rest. I'm sleeping during the day and stuff that you normally wouldn't do. So, but that's good, right? Your body knows exactly what to do. Your body knows how to heal itself. So I'll just let it do that. GM. All right. Oh yeah, still on the intro photo, correct? I hadn't been looking at anything there, but still on the intro photo. Eat a burger. I've had burgers. I've had a pizza. I've had fucking a bunch of food. Right now, I'm actually at the point where I think I'm just perfect. Just had enough food. Feeling good. That'll do me for the evening. Probably won't eat again. Anyway. So if you have a question, excuse me, if you have a question, drop it into Bootcamp Ask Michael and I'll answer it there. And let's go. Let's get into it and see what's going on. My people is not your food. What do I have? People, burgers, pizza, burger. Can we look at Bitcoin? Yeah. Keeps bouncing off the lows, but these aren't bottoms to me. These sharp moves off the lows are squeezes, and I suspect Bitcoin to drift back down. But it might also continue squeezing. This is the thing with the squeeze. It can keep chopping, but if it keeps going up like that, I do expect it will come back down. And to me, this isn't indicative of a reversal yet. This is basically just a channel. As you can draw here, you can just see it's just a downtrend channel. And these, after an impulse, then a downtrend channel, these resolve to the downside more often than not. If it's gonna break, and quite often what it can do first is go up and look like it's breaking out. If it drops back in, that's quite often how it can make its way down. There's a lot of work needs to be done here for this to reverse, to flip back to bullish. So Bitcoin for me is the same. I think, I actually think we break. I think we break 60. I think we actually potentially go significantly lower. But there's no point putting the cart before the horse. My plans are laid out very clearly. I think all coins will bleed. Many of them will be choppy and sideways. Just in general, this market is not going to really be very rewarding for quite a while. That's the easiest guess to make, right? And what happens is, it's easy to get yourself caught up with where's the next trade come from? And when the market's not moving, when the market's not really moving much, you end up subconsciously trying to force trades. You're looking at like you're sort of looking for a long or looking for a short rather than actually just letting it come to you. Right? When the market's rising and it's clearly trending, it's easier to let it come to you because you've got the general direction. And that's the main thing. Like, understanding the general direction of the market is at least 50% of the battle. Right? It doesn't matter how good your system is. If you don't understand the general direction, the underlying conditions, is it bullish, is it bearish, is it sideways, then you'll struggle. Akinwandi, how about the idea of using your mind to heal your body? What's your take? Yeah, absolutely. I mean, I was saying this to my captains last night. I just operate of pure delusion that I can't get hurt. I was like, I am Wolverine. The reason I say that is obviously to be, it's half a joke, but also, if you just view yourself as someone who heals really quickly from injuries, then don't you have a better chance of healing really quickly from injuries? You do, right? Does it mean you'll always heal really quickly from injuries? No, but it's funny. When my ankle was dislocated, I was like, all right, this is really bad. Like, I was lying on the ground and I was like, this is really bad because it was fully sideways. And then as soon as it like popped back in, the second it popped back in, even though there could have been it could have been broken or torn ligaments or whatever, as soon as the dislocation popped back in, I was like, oh, I'll be fine. And it wasn't like, obviously there was no medical grounds for that, but I just said it and I just kept saying it, I'm fine. I'll get an x-ray. I don't think anything's broken. It's fine. And that's sort of just faith in whatever. I operate from that level of belief, because why wouldn't you? What's the alternative? Like, oh, there's definitely something broken. There's definitely something broken. There's definitely something. Well, why the fuck would you even just say that? What's the point? How does it serve you to have a negative mindset on it? Yeah, positivity. Positivity only matters. It's literally only important when things are hard. It's easy to have a positive mindset when everything's going well. And I've developed this mindset for over, my entire life. And when I was lying on the ground in agony, like it's super painful. I don't know if you've dislocated your ankle before. I never had. Dislocated fingers and toes, but never a full joint like my ankle. It is insanely painful to see your foot at a full 90-degree angle. But even then, like just as soon as it was happening, right? It was never like, oh, this is so bad, it's going to get so much worse. It pain, but it was also like, okay, how do I fix it? Just right away. I was thinking, because I was supposed to fly today, which obviously I didn't do. I was on the ground just thinking, oh, fuck, like I'm gonna have to rebook the flights. Probably gonna have to wait a couple of days. Gonna have to get to the hospital. It's just you just go into practical mode. You're like, how do I fix this? You can't. The time to if you're fucking 10 years old, that basically was me. Easyology, yes, except not as severe. I think that was his actual leg. For me, it was just my ankle. But like you have to have a mindset of practicality, right? For me, it's not acceptable to get injured and do nothing and complain and cry and moan once you're over like 13 years old as a boy or a man. Maybe you can push it to 16. Certainly not at my age, right? It's like, you can't. Because no one's there to like care for you in such a sense of you can't just fall back and rely on your parents to look after you and take some days off school and doing this and that. You're like, fucking no, I've got a life to live. So anyway, it's all good. Questions. All right, I've got a backlog of questions, so I'm going to get through any questions that are blue belt ones. Where did I was last answering over here. Okay. Blue belts, blue belts, blue belts, blue belts, blue belts. Blue belts. Diamond? You blue belt? Deleted message. No. Yes. GM Diamond. GM. I just built and backtested a Bollinger Band mean reversion system to be used over short time frames, 15-minute chart. 80% win rate and 0.44 EV, so I plan on taking it into live trading. When trading over this time frame, do you still use the same percentage of portfolio risk that you use for higher time frame swing trade? My initial thoughts are no, due to the volume of trades that my system gets me into and the possibility of compounding too many losses over a short time frame. How do you approach allocating percent risk while scalping compared to high time frame trades? Well, a lot of this is covered in purple and brown belt. And so like right now you should focus on doing this system with dollar, just a fixed dollar risk, so you can actually run it through that test to trade it live. And then when you get to purple belt and beyond, all of that is explained in detail. I'll take you through it. But of course, I'm also willing to answer it, right? In a very simple sense, if you're trading lower time frames, you want to think about your total trading balance as your ammo, right? I think this is yesterday's daily lesson about how many bullets you have, right? How many shots you can take. And so if you've got 100k, 80% of it is in spot, 20% of it is for trading. So you've got 20k to trade with. And that 20k is split up between day trades, swing trades, position trades. How should you size it appropriately? Because you're right in saying something like a fixed 2% of risk, right? Per trade. A fixed 1% of risk per trade. So that would mean $200 or $400, whether it's 1 or 2%. It's definitely not the same to use that amount of risk on a 15-minute system that might give you 2 trades a day versus a 4-hour trend system that only gives you a trade every 6 weeks or 4 weeks. Right? Because that system with 2 trades a day, you really want to imagine your maximum loss streak and your maximum monthly drawdown. That's generally the best way of doing it. So go and look at your back-tested results. What was your biggest loss streak? Typically, every back-tested series is going to have at least 4 losses in a row at some point. Most of them will have probably a loss streak of 5, and many of them will have a loss streak of 6 or even 7. So whatever system it is you're running, especially a lower time frame system, run it through that and say, okay, I can reasonably expect at some point, if I keep trading, I will lose 5 trades in a row, right? So that's your answer. Because if you can lose 5 trades in a row, then you need to make sure that those 5 trades in a row do not meaningfully impact your portfolio on the negative side. So that probably leans more towards like, if your back-tested results are on a low time frame, right? This is very much about low time frame. I'll explain why. So day trading or taking multiple trades per week, right? If you're taking anything from multiple trades per day to multiple trades per week, I'll consider that to be low time frame. That can be scalping, day trading, and it's basically day trading, right? You might hold some overnight, but you're basically scalping or day trading. Then you really can only go 1% risk. Again, if your backtests and your live results show that you could have a 5 or a 6 or a 7 loss streak, you can't go beyond 1%, because when that comes, that will come in a day or in 2 days or 3 days. And if you lose 7% of your portfolio in 3 days, that is a lot. That's a big hit. Because remember, when you lose it, you have to make more to get it back. So you lose 7%, you have to make back about 9% just to get back to break even. So, and also, if you're looking at it in the context of like a week, if you have as a low time frame trader, if you make 7% profit in a week, that is absolutely brilliant performance. Because if you did 7% every week, you would be an extremely wealthy trader. 7% per week compounded adds up massively over even just a year. So it's actually not realistic to grow it by 7% every week. And the reason I say that about growth is if you put yourself in a position where you can lose 7 trades in a row in the same week, 1% risk each, and next thing your portfolio is down 7%, that's still a lot. Now, I wouldn't go below 1%. 1% is probably fine in that case. But I say that because a lot of people think, well, I should just, what's the difference between 1 and 2? That's always the question I get. It's like, and I get it, right? You've got your portfolio, right? So you've got your 100%, 10 grand. Let's use a round number, 10 grand. 1% is $100. 2% is $200 of risk. But when you think about it before you actually trade, it's easy to rationalize and say, wait a minute, 100% is my balance, right? I have 10k, that's 100%. Even if I used 2% of risk, I know Michael says use 1%, that would give me 100 bullets. But 2% risk still gives me 50 bullets. And I never lose 50 trades in a row. So, even if I have a 5 or 6 or 7 loss streak, that's fine. I've got 50 bullets, and so you win 2%. And it's easy to rationalize that. But when it actually happens, and you lose 14% of your balance because you have 7 losses at 2%, and you're down 14%, roughly, obviously the percentages will change slightly, that's a huge hit to take in just a few days. Or a week. Now, what's totally different is higher time frame trading, swing trading. If you only take 1 trade a month, 2 trades a month, it would take you either 3 to 7 months to have a 7 loss streak, right? If you have 1 or 2 trades a month. So you're going to talk multiple months just to have that streak of losses. So even if you use 2% there, it could be multiple months before you lose that 14%. And that spreads out to where each month, even if you have a bad run of 3 months where you lose, it's going to be like a -3, a -2, and a -2, right? And not great, you don't want to do that, you want to make money, but it's not catastrophic. So the time frame matters. How often are you trading? And one of the things, to bring it back, I think your goal as a trader should always be a maximum monthly drawdown of 10%. Now it should actually be, you should aim for 5, because this is the problem too with risk. Maximum drawdown is not a target. I see this mistake far too much. Maximum drawdown does not mean I keep going until I lose 10%. It's not a target. It's the maximum. Ideally, you stay well below that. And a lot of times you might want to stop trading or cut back after 5% down in a month. This is important for anyone, really anyone at any stage of trading. Because, some of the best, I know Paul Tudor Jones was famous for this. He's never had a 10% loss month. Because his rule was, I stop if I get to 10%. He's never had exceeding 10% monthly loss. And if you do that, and you survive long enough, your portfolio will grow. It's really simple. It is really simple. Because so much of trading is survival, and then having the discipline to stop. Because, also remember that it's percentages, so it scales down. If you have 10k and you lose 10% this month, you stop. Now you're down to 9k. You lose 10% the next month. And you're not down to 8k now, you're down to 8,100. Right? Because 9k, 10% is 900. So you scale it down. And so even if you lost 10 months in a row at 10% loss, you would still be alive. And of course, that's extremely hard to do. That's very, very, very unlikely to happen. So it's really important that you keep yourself in the game. You stay alive. Just got an alert there. Just got an alert for Apu. It's actually looking good. I think probably gonna have to jump back into Apu soon. It's not going down. And it's following pretty much the path I wanted to see. Where it's having this little decline on the 4 hour after coming up into the highs. It's broken the downtrend line, low to a high, higher low to form. 58 cents or 0.0058. That's the important kind of breakdown level to flip back again. But this structure is pretty constructive. This might just be a coin that's going higher, and there's nothing more to it than that. So probably a position to get built in Apu shortly. I'm already holding some, obviously. The question is just, when do I go full size again? And I would like to see a deeper correction where it spends a lot more time going lower, but the market doesn't seem to be giving it. And so we'll always listen to the market. You can see here on the 4 hour, there's multiple attempts pushing down. Bands red, bands green, bands red. They're about to go green again on the 4 hour. We've reclaimed the 50 on the 4 hour. The 50, 100, 200 all remain in an uptrend. So Apu is one of the strongest charts in the whole market at the moment. And I don't think you should fade that strength. Gives you a pretty decent invalidation here as well. If you get a strong hourly or 4 hour close above this level, that will constitute a breakout, breaking away from this lower end, then if it starts to close and trade up here, I would suspect that it doesn't come back down here, and then from a trade perspective, you're looking at like about a 30% stop loss, so you can size your trade appropriately for that. Yeah, Apu's looking decent. Breadman is a white belt. Hassan, GM. In the 100 live trades for blue belt, how can I calculate the loss to be in range between 80 cents and $110? Because in every other coin there's a difference in between the prices. My stop loss interim lower high all the time, but some coins would be 20 cents for example, and other coins might be $150. Second question. Bro, you need to understand position sizing. So go and watch the lessons again about position sizing. You haven't understood the concept. Position sizing, go and research it. Kavon. Have a plan to buy Bitcoin spot every 2 weeks and don't sell for the next 10 years. What's your thoughts? I mean, if that's your plan, then that's your plan. Do I think that it's a bad idea to invest in Bitcoin long term? No. I would find it very hard to argue with the virtues of buying and holding Bitcoin long term. Yeah. I mean, if you're gonna have an approach to long-term investing over the next decade, hard to think of a better thing than Bitcoin, because everything else is kind of unknown. right? The top stocks from 10 years ago are not still the top stocks now. So obviously you can invest in the S&P 500 or the Nasdaq. They'll probably still do fine. But the actual stock picking every 10 years is going to be different. It's going to be a new set of stocks that are the leaders. So you can't rely on Apple to continue to outperform the way it has done in the past 10 years for the next 10 years. Obviously, every other market is super unknown. The thing about Bitcoin is it's known. We don't know where the price is going to go exactly, but we know exactly what it is. We know the halving schedule. We know the fixed supply issuance. We know 20 million coins and no more. We know many of the coins are lost, so it's even less than 20 million. So supply is completely, perfectly forecast. We can't forecast demand. But we can make reasonable expectation that more and more people will adopt Bitcoin over the years. And even just buying something to hold for 10 years is obviously not risk-free. It's not as risky as like trying to fucking scalp a 1 minute chart or take frequent trades. But every time you put your money, every time you take your dollars or your euros or your pounds and you swap them into anything else, you're taking risk. The only reason you swap your dollars or euros or pounds into Bitcoin or a stock or gold or whatever is because you think that thing can go up. But of course, from the moment you buy, that thing could just go down. And the problem is it could go down and then you could sell at a loss and then it could go back up. So even in a winning trade or a winning investment, you can still lose. If you bought Bitcoin at 60 and you wanted to hold it for 10 years and then it went down over the next year to 40 and then you sold because it was just too much, too painful, whatever, and you sold and got out and then it went to 150 2 or 3 years later, directionally you were correct. It was a perfect investment. But you can still fuck it up along the way. So the other thing I would say is, why 10 years? Like, what's the reason? And I'm not saying this is a bad idea. I think it's a good idea. But have you thought it through as in, I'm going to buy this certain amount for 10 years no matter what? I would say like a small percentage. You know, it's not like all my excess cash, I'm going to put it all into Bitcoin for a 10-year time frame, because that ends up not being realistic, because eventually you need to sell for some reason. You want to realize some of it, like some of my Bitcoin and some of the trades on Bitcoin, like some of them I'm absolutely just doing to get more money, right? Like if I spot an opportunity to take a trade, I'm trying to accumulate more. That might be more dollars, it might be more Bitcoin. But if the only mindset I had was everything has to be super long-term Bitcoin, then I just wouldn't trade, right? I would just work wherever I could work and then invest the excess. Because you might say, oh, well, then, but if you're good at trading, don't you just trade and use the profits to buy more Bitcoin long-term? The answer is yes, in a sense, but you can't forecast future profitability perfectly. And there's another very, 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 I don't agree with this, but it's very valid, which is like the Bitcoin maxis idea. And it's like, if you truly believe Bitcoin is the best, and if you truly believe Bitcoin's going to $1 million, then the amount you have to make on your trades now is astronomical. Because let's say you put $1,000 risk on a trade, and that's your normal. You've got 100k, 1% risk is $1,000. And you put that risk on a trade, and if it wins, you make back 3,000. Right? So that's a positive risk reward. What the Bitcoin maxi or the Bitcoin long-term investment belief would be, well, okay, you've risked 1 to make 3 in fiat dollar terms, but you could have took that 1,000 and put it into Bitcoin for 10 years and made 15x. Right? If it goes to 1 million. Or 10x if it goes to 500,000, 600,000, or whatever, right? But they're saying it's just a delayed gratification. If you just put it there into Bitcoin for 10 years, you're going to 5x it, 10x it, 20x it, whatever. So even though it feels like feels great now, you're making this 3-to-1 trade return, that's only in nominal fiat terms. And then what happens when you lose? Well, when you lose 1,000, that 1,000's gone. That's 1,000 that you lost that could have been put into Bitcoin again for a 5, 10, 15x. Now, this is very theoretical stuff. In reality, there's many things that fly in the face of that. First of all, for me, 10 years is too long, right? I don't want to wait 10 years with all of my money for it to grow to that level. So the way I do it is I split it. I have some of my money with that type of mindset. I have some of my net worth in Bitcoin for the long, long, long term. And then I have other that's much more liquid and changes and moves around a lot, where I trade it. That might be trade for a cycle, a year, 2 years. That might be my trading portfolio, which could be minutes to hours to days. And that is probably the best approach for most of you who want to be traders. It's the hybrid approach. It's like I have a long-term view, and then I also have a short-term trading to try and see, okay, do I have the skills to trade profitably to make more money, which I can then put into things like long-term Bitcoin. But that's actually a tougher one. That's a tougher challenge to overcome than most people think. Because it's all fine when things are going up. But when things get tough, either on the investment side or on the trading side, it's fraught with difficulty. Because when trading's going well, right? Your short-term trading's going well. You're thinking, well, why am I only using 20% of my portfolio to short-term trade? Because it's going so well, I'm making all these winning trades, and my spot bags they're okay, they're moving up a little bit, but I'm trading really well. Imagine if I was trading with 100%, I'd have made literally 5 times as much money. That thought's going to come into your head. And when that thought comes into your head, remember, that's short-term thinking. That's applying your most recent streak of form as if it was continuous. The reason why you trade with a smaller amount, whatever percent that is for you, and this is like bull market specific, if you think it's a bull market, the reason why you keep most of your money in spot in a bull market is because you know the market's going to do the work. It doesn't mean every day Bitcoin or altcoins are going to be up. And if it doesn't mean that if you're making good trades that you should have 100% in those good trades. It's because you have a process that you know the majority will go up through your spot holdings, your 5, 10x's and beyond. And your trades are like the cherry on top. You make some profit, you buy more alts. You make some profit, you buy more Bitcoin. You reinvest until you think it's too late to reinvest anymore. So there's that side, right, where you think the trading is going well and it makes you want to change your plan and start to, basically sell your spot coins and trade the whole balance. But then what invariably happens is you 5x your risk because you're trading with your full stack, and then you have a loss streak. And next thing, 10% of your entire net worth is gone. And that could be in as little as a few days. And that leaves you really susceptible to going on tilt. Right? Where you lose your head basically and you start chasing. And so that's one side. And then the other side. It's all well and good saying, I'm going to trade, get my little bit extra, dollar cost average it into the coins, and then I'm going to hold my coins long term. But what happens when we hit a bear market? This is the eternal struggle of the crypto trader. It's all right to have a 10-year time frame for Bitcoin, but if you do that with all of your money, then, and we go off the past, then every 3 years you're going to eat a 80% drawdown on your net worth. And you might think, yeah, but I know this. Look, the cycles, there's bull, there's bear, there's bull, there's bear, I'll be fine. But you won't be fine because it's not just the price and it's not just in theory. It's watching it go from 69k down to 16. And think of all the steps along the way, all the days, because it took a year to do it. 365 days, basically. We have to wake up and not fuck things up by selling. Because you'll convince yourself too, selling could be right. If you'd have sold at 40k Bitcoin when you thought the bear market was started, it was obviously the right thing to do because it went down to 16. But again, that's easy in hindsight. So the hybrid approach is generally best. It keeps you in both camps. Ideji, I want to ask you about this video in Calculate Your System EV. Is it average R 3.33 equals reward? Yes. If your risk reward for all of these trades, where am I looking here? Yeah. if the risk reward of all your winners added up and then take away all your losers and then divide it by 100, assuming it's 100 trades, that'll be your average hour. Easydology. I forgot to ask how your ankle's holding up. 100%, bro. Never been better. The agents rugged you when you were talking about pursuing golf. They're scared of your birdies. I'll be fine. I'll be back on the course soon. Based on your teachings, I noticed volatility compressing significantly in the Bitcoin daily chart. Is this an indication of a significant move, either the downside or upside? Throughout the past, wanted to see if I learned the concept correctly. Absolutely. Yeah. Obviously, I don't think it like go like that specifically, but your logic is spot on. After high volatility, volatility is just like a trend itself. You have trends of volatility. And we tend to move from high volatility phases into low volatility phases. And a key feature of low vol is that it really persists. And a lot of this is due to options and options flows and options and selling, buying and selling of options, and the pinning effect. Why? Because it's hard to move price, right? You don't really think about this, but let's get a little bit theoretical with it. Or just imagine, is it normal for an asset to be worth 39k and then a week later be worth 45k and then a week later be worth 50k and then a week later be worth 55k and then a week later be worth 60k and then a week later be worth 65k and then a week later be worth 70k and go up as high as 73? Is that normal? What I just described, which was the Bitcoin trend from late January until March, about 8 weeks. It's not normal for the price of something to go up 5k every week. But because it's crypto, and when it happens, we think it is normal. And people get used to high volatility.